Remember I told you they're going to have to take profits on those positions soon, right? Because they can't keep those positions that high for that much longer. How's it going, fellow traders? Magic Trader here, and this is your CFTC data for October 8th, 2024. Hello and welcome back again. Welcome back. It's nice to have you. We're going to go through the latest set of data just sent out by the CFTC on Friday. It's October 8th data, and here's a brief snapshot of the positions held by the institutions as of that date. You could take a look here and you can see that we have the change column, and I always like to look at the change column and see what's going on with the positions, whether there was a significant increase or decrease in positions. So let's take a look at that first. Change column, let's just do that. So what do we got? What do we see? Anything major sticking out? Well, we see Aussie was bullish, the CAD was bullish, US Swiss did nothing, Euro was bearish, the pound slightly bearish, US dollar Japanese yen bullish, okay, gold bearish, oil bullish, S&P 500 a little bit bearish, but bonds were significantly bullish, okay? So let's take a look now and start with gold. What do we have going on with gold? Remember, gold longs 387,000. That was pretty aggressive. Remember I told you they're going to have to take profits on those positions soon, right? Because they can't keep those positions that high for that much longer. Why? Because all-time maximum size was 408,000 and 387 was pretty darn close to that, right? Just a little bit more and we would have reached that. So what took place? Well, they took, okay? They took some profits. 387, 370, now down to 348, okay? So you can see there indeed was the profit taking. So this latest set of data right here is 348, big drop. So what does that tell us? That tells us that right here, price started profit taking. The banks started taking profits on their positions. Then for a second week, they did the same thing. Removed a lot of their long positions, reducing them from 370 to 348. Now we got a slight pullback here, but this past week saw price rally straight back up. So what's going on here? Are we going to see a continued move to the downside? There's a good chance of it. Here's the deal, okay? We have price at an all-time high scenario, okay? So there is no institutional supply zones that are coming into play, which means we have to watch the lower time frames to see that supply coming into the chart. Now, is there supply coming into the chart on the weekly? No. But on the daily, cha-ching, there is. Okay, supply is coming in on the daily chart. And it has rallied up, price rallied up right into that area of supply. So we are expecting short-term momentum to the downside. That's the bias. Could they remove supply and shoot price up? Sure, they could. But we're going to be watching that daily supply zone to see if it wants to hold and see if the banks are going to use it to drop price. They definitely can do that because, you know, they've reduced their longs from 387 to 348. Could they continue? I think there's a good chance of it, okay? Now, to give us a bit better indication of whether or not gold is going to drop even further, we need to take a look at the other pairs, okay? So let's start by briefly looking at oil. What do we see? The long column is cooled off, okay? You see the coloration of the cells blue. Short column is blue as well, so cooled off. So there's no real bias there when we take a look at their positions. Another thing is that if we look here, we can see that they were somewhat bullish back in July, August. Entering into September, they became neutral with their positions, right? And if we go over to the supply and demand dynamics here, playing out, we see weekly demand came into play, and that is what's providing this bullish move to the upside. Other than that, there's nothing really that sticks out here that I would want to trade, so we continue moving forward. Now, US dollar. Now, the question is, can we use the US dollar to help determine the direction of price with gold? That's the question. I would just throw this out there and say no. And here's the reason why. Because when I'm looking at the CFTC data here, and I'm combining it with what I'm seeing on the chart, there's a different dynamic playing out on the chart, and it's not matching the CFTC data, okay? Like recently, we see that they increased shorts right here over the last 3 weeks. And yet, if you take a look at the chart, you can see big rally up in price. Big rally up in price, but they're increasing shorts, not longs. Look at longs. Longs are cooled off, folks. Look, longs, last 4 weeks, cooled off. They're not even focused on long positions right now. They're very cooled off. So I don't see any way that the dollar can help forecast the direction of gold at this point. What I will point out is something that I think we should all pay attention to is the fact that we used to be bullish here, okay? And when I say we, I mean the banks, the institutions that we're tracking. They used to be bullish here May, June, July, August. Recently, since the beginning of September, they've offloaded a major portion of their long positions, okay? Right here, September 17. Remember what that was? That was contracts expiring. So they use contracts expirations to offload a significant portion of their long positions. So let's keep that in mind, because I think, that is somewhat of a bearish signal. Not seeing any supply. We have an imbalance here, but this isn't an institutional supply area. So yes, it could be a reaction from there, but it could also continue going higher. Okay, so let's take a look at the Aussie. Look at the Aussie. First thing that sticks out to me is when I look at long positions, what do I see? A big increase in longs, 53.81, 101, and 111. Remember how we were telling you that major institutional demand came into play here? We had price drop into it again, one more time, and then is reacting to the upside. And so that is the big increase in long positions, was to get price to react off of that area of demand and push up. And so now on the weekly chart, we got that nice push up right into where? An institutional supply zone here, 68.76s. And now we're seeing the drop in price. Okay, but this drop in price, the banks were increasing longs to 111. What's maximum size? It'd be good to know. Maximum size is 144,000. We're at 111. So we still got room for them to continue adding longs if they want to. What do we think is going to happen? Well, the downside pressure came in already from that weekly area of supply. It could be short-lived. It's stopping here at a nice imbalance here. So could we see a move to the upside short term? Yeah, sure, we could see that, okay? But nothing's very clear here. Nothing's very clear. And if you look at the coloration of the cells, what do we see? Down here, up until June, they were bearish. And what has happened ever since? Look, 53s, 49s. Look at the long column, okay? 46s, 30s, okay? This is since June, okay? This is neutral. The coloration of the cells are neutral. That tells me they aren't aggressive with longs or shorts. So I really don't want to be opening up any type of position, okay? Okay, this tells us the sentiment. Overall sentiment is tipsy-turvy, right? A little bit neutral and then bearish and then neutral and then bearish and then neutral, okay? It's not making sense. Yes, aggressive with longs here with their positioning, but the bias is not strong, okay? And also take a look at the net positions here. We went from bearish to a little bit of bullish and then bearish and then bullish again. Okay, there isn't anything sustainable here, so it's difficult to trade something when it's not sustainable. or we don't see any type of sustainable positioning. USCAD, they needed to take profits on their long positions. Remember we told you that when price was contacting supply, and they sure did, dropping them from 219 all the way down to 90,000. Boom. Okay. See what profit taking does? Okay. Profit taking on long positions. That's what it does. It sure wasn't them increasing shorts, because look at shorts. Shorts have been neutral all this time. This is caused by profit taking on long positions. And so now you see they increased 90, 95, 110 with their positions, their long positions, and now we see the rally up in price. Again, they're not focusing on shorts right now. This is all about longs. So are they going to rally it back up before a significant drop? There is evidence to support that. Okay, there's evidence to support that. Do I think it could rally up more? Well, yeah, the momentum and positionings is definitely suggesting that. So I think there's a good chance of that. And if I'm going to use the USCAD as some kind of an indication of what direction gold could head in, I would say, you know, this looks good for a drop, or for a rally, I should say, which means gold looks good for the drop. Okay, so let's go over to US Swiss. What do we see? Shorts are not in focus. Longs have been the position that has been where the focus has been, okay? Pretty much most of the year. Most of the year. So 29.30, they slightly increased their longs, and then we get a little bit of a rally up in price here. But demand still in play. Okay, second test. Could price go higher? Yes, because this isn't supply. So price could go higher, especially the fact that they're only been focusing on long positions, and we're low on the spectrum here. Look at maximum size, 89,000. Okay, we're well below half of that size, so they could definitely add to them. Euro, here's an interesting one. Here is an interesting one. So you remember when positions were back in the 218s, 215s, would I say they were going to take profits on their positions? And they did, which fueled a move to the downside. Okay, we took a short, we profited, and it was nice. Okay, so now what? We have supply on the higher time frames coming into play. They need to take profits on long positions. They did. They reduced them down to 178, now down to 173. Could they continue with this trend? Yes, they could. Here's another thing I'll point out. Look, since long positions were at 218, shorts were 125, and then they reduced shorts. But look at recently, 112, 116, 122, 134, increasing shorts here, while profit taking on longs. This is a little bit of a trend here. You see that? A little bit of a trend. These numbers are going higher. These numbers are going lower. And they all suggest a move lower. Okay? So, does that help in determining the direction of gold? Yeah, kind of does. But over the medium term, I wouldn't say it's something that is definitely going to happen in the short term. I mean, the odds are yes, but looks more like over the medium term. So we should be paying attention to that as things unfold. All right, the pound. Here's an interesting one. Remember when price was up here and we had 188,000, they needed to take profits, okay? So they dropped price, but it wasn't sustainable, right? So they moved it back up, adding longs. Then here was 160. Then they dropped slightly, rally back up. Now, 161, taking profits again. We're always by that all-time high of 188,000. What's going to happen? Well, major supply is in play. The force of price is to the downside. We have a momentum shift that's been created here on the lower time frame, not on the weekly. And we're watching for a rally up and then continue to move low down. So what does that tell us? Could there be a little bit of upside pressure on gold? Yeah. Or could gold hold the supply that it's currently in? Well, price rallies up here in preparation for the move down. That's also a possibility. But overall bias is that we see some downside here on the pound. US dollar, Japanese yen. Remember I told you they were going to have to close off their positions? Their short positions, and they did, and that fueled the move to the upside. Are they done? Don't know. I do know that there is no supply being contacted yet, so yeah, they could move price even higher. It's possible. And that happens, yeah, that would mean likely gold head lower, right? Strong dollar, weaker gold, looking pretty good for that. And the last one, Kiwi. We see on the weekly chart a push to the downside. Long positions being closed off. Short positions being closed off. Look at the coloration of the cells here. Has anything been sustained for any good amount of months? Not really. We had a month and a half here of bearishness, and then a month and a half here of bullishness, and then a month and a half here of bearishness, and then some neutral. So that's the storyline here that we're following. So remember, neutral, bearish, bullish, bearish, neutral. Okay? If you had to buy if you had to bet on this cycle, what would come after? You know, bearishness maybe. I don't know. You'd have to guess, right? Neutral, bearish, bullish, neutral, or bearish, neutral. What comes after? Bullish, bearish again? Who knows? But it's not something that's sustainable. Again, this is what we talk about. It's not sustainable, so it's not something that I want to trade. But it's good to know what the institutions are doing because you have good insight as to whether or not you should even be in a trade. So short-term momentum for gold, likely to the downside. Medium-term, euro, pound, looks like more downside is going to be coming. Okay. So I'm going to be paying attention to that as things unfold. All right, ladies and gents, that's about it. Hope you enjoyed the session. If you want to learn more about how we do our supply and demand analysis combined with CFTC data, come and join us, www.whiteoakfx.com. We just started a brand new level 1 class where we're teaching you stock market mastery. It's unlike anything you've ever seen out there. I guarantee you. All right, come to our website, learn more about it. We'd love to have you. And that's it. You take care, and so long.